many questions about these topics. Every time we come here, we don't come here just to put in just a presentation, just like we're educating. No, we listen to our listeners. We listen to our communities, what they need to know most, what they don't understand, and that is what we present. So
in America, there's approximately about 150 million policies. Of those 150 million policies, 149 million, you have to die in order to collect, to get money from it, which gives us a big opportunity as financial professionals. We have a whole lot of people that we need to help to learn about living benefits.
And that account is the account that most elite people use. It's not like you and me account that we know. So this is the elite. This is what they do to build their children wealth. They have this account when the kids are born, where there's absolutely tax-free, zero risk of their kids ever losing their money. And also money is protected from the market downturn.
Good evening, everyone. Good evening for our visitors. Good evening for the team. Thank you for taking your time to join us tonight in this financial literacy session. We take a great honor being with our listeners, being with our communities, learning together how actually to protect our assets, what matters the most, our money. And that is why our session, we called it Financial Literacy and Money Matters. I believe to everyone who joined us tonight, money is so important to you. So is it for me. And that is why we took on this crusade to educate our communities, to educate each other, to educate ourselves about money. Money is so important. That is why we all work so hard every day. But so many times we find ourselves not even knowing how to manage it, or maybe we know, but we don't know the best ways of managing it. So be the young people or the old, the young or the old, knowing how to manage your money, the relationship you have with your money, starting at an early age, is going to determine how your future is going to end. And that is why financial literacy is so important. And that is why we have been actually on that crusade to make sure that we learn together to be better savers, to have like a bright futures, because when we save, our futures are going to be bright. So tonight, my name is speaking. I'm going to be moderating this session. My name is Immaculate Businje. I live in Dallas, Texas. I'm married with 2 children. I'm a financial professional. I have backgrounds in an undergrad in economics, master's in business administration. I'm a licensed financial professional. I've been doing this for over 6 years, and I'm glad to be with you tonight. In front of you, I'll have 2 special guests who happens to be my team members, Mr. Roy Kaizi, and I'll have Madame Serafina Mwiseneza, and I'll give them the honor to introduce themselves, to tell you who they are before we can actually start digging deep into the session we have tonight. So I'll go with Madame Serafina. Please go ahead and tell us who you are, what you do, what you love to do the most, and then we'll start from there. The floor is yours, Serafina.
Oh, thank you, Immaculate. Hi, good evening, everyone. Good morning, good evening, team. Good evening, guests. We are so glad you joined us tonight. So, like Immaculate said, my name is Serafina Mwiseneza. I live in Fort Worth, Texas, to be exact. I'm a mother of 3, married, and I am a financial professional, which is what I love to do. Besides that, I have 20 years experience in sales and services, and I'm also a Texas real estate agent. So glad to have everybody tonight.
Thank you. Thank you. What a wealth of experience. We are glad to have you as a speaker tonight, Madam Serafina. Thank you. Next will be, our next speaker is going to be Mr. Roy Kaizi. Please go ahead, sir, open your mic and tell us who you are, and then we'll go from there.
Thank you, Miss Immaculate. and everybody for joining us today. Name is Roy Kaizi, in the Fort Worth area. I am an experienced consultant in taxes, insurance, previously in the banking industry, credit analysts and management with various banks. I've been in the insurance field for over 15 years. I love it. It has done good things for me. I'm married, and I'm here to discuss a passion in the insurance industry. Thank you all. I'm looking forward to sharing some great information.
Thank you so much again, Mr. Kaizi. That was so lovely to hear. So for the visitors who have joined us tonight as their first time actually joining us, we have had other sessions. We're now going to go back into everything that we did. But if you can do a little bit of a recap, for the first two sessions, we focus on, because we wanted to know what is financial literacy. First of all, it's learning about everything that we need to know how to manage our finances. But in this particular case, we wanted to see how can we actually leverage, like in the past discussions we had, how can we leverage the products of life insurance to actually take us through those financial literacy. So in the past, we talked about what is life insurance, who needs it, and why. And actually, surprisingly, we came to find out, to agree with everyone, with our listeners and the discussants, that everybody out there actually does need life insurance, as long as you know that for you to survive, for your family to survive, your paycheck is needed. If you know that you can't survive without a paycheck, without going to work, you need a life insurance, because if you get sick, if something happens to you and you die, your family will need to survive. Or even if you get sick, you will need to survive. So we figured out that altogether, that life insurance is actually essential, an essential product for everyone who has a home, who has children, who needs actually any money to survive. So that was one that we actually discussed. And then we went through to see the kinds of life insurance out there. What are they? Because people get confused. I have one from work. Why do I need it? But we came to figure out that the ones from work, the ones that we call group life, it is a work policy, not your own. So we actually came to agree that you having your own private policy, that is what you call yours. But the one from group is a group, is not yours, because when you leave work, you're going to lose it. And then also we touched a little bit about the term life. Many people love the term because it's cheap. So the term life happens to be expensive because it is a term. One point is going to terminate and you're going to stay without the protection that you needed. And then we saw there was one, maybe our discussants tonight are going to go deeper into them and explain to us what the difference is. But the beauty of this is all the discussions we had, everything is on record. If there is anyone who wants to go back and listen to everything that we have done in the past, we have all the recordings, everything is there. Feel free to send a message with your number in the chat. We're going to go ahead and send you all the recordings that we did in the past, because they were all very, very intensive, very thorough. So I won't be able to go through everything that we did in the past. So without actually wasting so much time, because I won't be able to go back in the past what we did. As I said, we have everything recorded. If you need them, we'll be able to provide you with the recording so you can go in and listen for yourselves. So tonight we have great speakers. As I said, they introduce themselves. We'll be touching two crucial topics. One is going to be about income protection and the power of living benefits. And the reason we chose that is because we've been getting so many questions about these topics. Every time we come here, we don't come here just to put in just a presentation, just like we're educating. No, we listen to our listeners. We listen to our communities, what they need to know most, what they don't understand, and that is what we present. So we always present what we get from our communities. The questions we get the most are the questions we come here to discuss. That is what I said tonight. would love this session to be so interactive so we can actually answer all the questions that you always send us when we're done actually doing the presentation. So the other topic is going to be generational wealth, a comprehensive approach to building $1 million baby. When I look in here, I see so many parents. Most of us are like first generational like immigrants here. We came in here, we were trying to work so hard to live the American dream. But we have our youngsters, our children. I wouldn't think that we would want them to live the way we lived or work so hard the way we worked so hard, because we paved the way for them so they can live actually a softer life. So that is what we're going to be actually going through tonight. Generating wealth, a comprehensive approach to building $1 million baby. So without wasting so much time, I see we have so many other guests. We're now going to go back to introductions, but maybe later when we're done, we can do that or in between. So we're going to go with the first question. As they always say, ladies goes first. We need to see that smile. So we're going to go with Madame Seraphine. She's going to take us through that beautiful question. Her being a mother, we thought it fits so better for her to take on. Actually, how do you think? The question was, so the question I got from our people was, what is the best approach to building a generational financial legacy for our children? Because there are so many ways out there. People get confused. But you, Serafina, as a financial professional, what have you found to be the best approach to building a financial legacy for our youngsters? Take it on, ma'am. The floor is yours.
Thank you, Madam Immaculate. Thank you so much. Now, this is a discussion that take it to heart, being like a mother, like you said. There is nothing that touches my heart when parents start building their children wealth ahead when their kids are still young. So the best approach is finding an account where there is no tax liability, there's a zero risk exposure to the market, preservation of the capital, you never lose your money, and also is a tax-free retirement income. And that account is the account that most elite people use. It's not like you and me account that we know. So this is the elite. This is what they do to build their children wealth. They have this account when the kids are born, where there's absolute tax-free, zero risk of their kids ever losing their money, and also money is protected from the market downturn. First, what I'm gonna start is the what most of us know. Every parent out there, they try to save as much money as they can, especially for the kids, let's say for college, right? All of us know the 529 account. A lot of us middle-class people, the only account that we know to save for our children is 529 account, which is account for an account for school saving, for college funds, right? But the 529 account is only for school. This account is only pay for in-state school, tuition fees, books, room and boarding, computer, any related accessory. It doesn't go anything above. So let's say you are saving your child education funds into the 529 account and your child decide not to go to college. What do? What happened to that money? That money, if you decide to use it for something else, there's a tax penalty for at least it's a 10% penalty if the money is used for something else that is not schooling. Okay? Not only that, if your child have a 529 account, that affects their financial aid as well, eligibility, because is it considered as an asset to the parents? So that will have an impact on the child getting financial aid. So what do the elites do that is better than the 529 plans? The elite start the young children with a juvenile index universal plan. It better suits those who seek flexibility to use funds for multiple purpose. So your money in your juvenile child index universal plan is not only for schooling, it's not only for books, it's not only for a computer or boarding or tuition. You can access the money at any time for any purpose. That's including education, addition benefit, like maybe buy his first vehicle, maybe put down a down payment for his mortgage after he graduate college. Not only that, this money you can borrow against, and it will be tax-free money. And that account, juvenile, it also come with living benefit, which is crucial. It comes with death benefit, and also you can use this money absolutely anytime you want. It's not only specific for college, okay? So if your child is 18 years old, you're about to send him to college. Let's say he have a full scholarship. You can use the money for what? Buy his first vehicle. You can leave the money in his account. When he finished college, he can buy his first car. He can start his first business without having to borrowing money from a bank. So IUL versus 529. 529 is strictly only for college tuition, okay? Juvenile Index Universal Life, it covers is like your child's small bank that he can use that accumulation amount of money for whatever he need it for, okay? So, and there is no limit to how much you can contribute to the Index Universal Life plan. Versus the 529 plan, the state have a limitation of how much you can put in your child 529 plan. All right. Does anybody have any question for me?
Yeah, just a quick question. Based on how the 529 account is used, does it have any limitations? I know it's juvenile, that's below 18, but is it withdrawable in the case, in the case it's needed to be used? Or and also, I think you mentioned it's only for school purposes. I'm not sure if I overheard that. I know it's free, it's no interest, it's free interest, but I just wanted to clarify if it's only for school purposes.
Okay, so are we talking about the Juvenile Index Universal? Yes. Or the 529?
The 529.
Perfect. So 529 is only for school purposes. It only cover in-state. So what state you live in? Maryland.
Yes.
Correct. So if you have a 529 in Maryland, that means that kids is limited only to go in school in Maryland.
That's right.
Okay. And the money in the 529 is only cover tuition, books, so anything that has to do with schooling, nothing above. You cannot even take the money out and buy your child a car. It's only for school only. So let's say your child is the best student and they end up getting scholarship in Harvard.
Yes.
Harvard is not in Maryland. What happened to your 529? 529 sits there, and when you try to withdraw the 529, you have to pay a penalty and also 10%, you pay taxes and also a 10% penalty because the money is used, it was only intended for schooling and now you are withdrawing the money to use it for something else.
Okay, so you mentioned about going to a different school. So if he goes outside the state, outside Maryland, then you still have to pay the interest.
No, you won't pay the interest, but you're not gonna be able to use the 529 funds to pay for his out-of-state college.
Okay.
Yes, the 529 is only for the state where you live in, where you pay the 529 plan.
So I have a question.
Go ahead.
Okay, so what if they decide to go out of state, but you've been paying, I don't know, for 18 years. Do they refund the money back to you, or does it just it's gone?
The money is not gone. You can withdraw the money with a 10% penalty plus taxes. So it's only tax-free if you use it just for the purpose of the education in the state where you reside.
Wow.
Now, versus the Juvenile Index Universal is your own bank. You can withdraw the money for any purpose at any time and use for whatever you want.
Okay.
That's a great
For
question.
some reason, I feel like the 529, there is a disadvantage. In the case the students worked so hard and was also given a scholarship somewhere outside the state. I think it's kind of a very big disadvantage, and it's limiting somehow the students.
It's very limiting. Another thing about the 529, let's say your student is a elite student, and there is let's say your student is a straight A's plus, and there is a student who's a B plus. They're both applying for the same scholarship, but your student, A plus student, has money in the 529 plan, and the other one doesn't. Do you know who they're gonna grant the scholarship to? It will be granted to the B plus student because the other one shows that he has the ability to pay for his tuition.
That's right.
Yes. That's a great question. Anybody else?
So actually, I think let's reserve the questions for after, so you can go through the presentation. When you're done, we'll ask actually the listeners to write all the questions you have, so you can be able to go through them after the presentation. I think that would be much better. Thank you so much.
Right.
And sorry about
Yes,
that.
thank you. Right. Awesome. So to continue, so the best thing to do as parents to start our Juvenile Index Universal Life is best to start early while our child is still early. So you have a head start for the financial growth. Okay. So the earlier you start, the better financially they're gonna be, the better cash accumulation is gonna be on a long period, on long term. And also the younger the children are, the cheaper, the lower your premium will be. Okay. And when the kid is ready to let's say take out the money out of their IUL, they can withdraw the money, borrow the money absolutely tax-free. And they, like I mentioned before, lower premium, cash accumulation over time because they start early. And also you can contribute as much as you want to their kids policy. So over time it builds up. So that way you can leverage the tax, the index growth and also the tax advantage. Thank you.
Oh, thank you so much, Serafina, for that. I think as parents, really, when it comes to children's our way of building actually our children's financial legacy, we don't want to leave with that topic because that is something that hits home to all of us as parents. Maybe because most of these questions really tends to be very interesting. You want to listen more, but you can't even put actually your mind to it. Do you mind actually taking us through an example, maybe just an example of how that IUL can be built? Maybe you pick something hypothetical, maybe a child, maybe 2 years old, 5 years old, to show us if maybe I have a 2 years old or 5 years old now, and I'm trying to save some money for college, or maybe for the future, how that can look like. Do you mind doing that? At least one example for us, please, if you can.
Come back again.
So if you can, do you mind actually learning an illustration for us for that index account for a child?
Oh, absolutely.
Yeah.
Yeah,
How can that look like
absolutely.
for us? Thank you.
So that being said, let me share with you guys how you can get your kids IUL and how the growth of the fund's gonna look like. Okay, so we are all parents here. So I'm just gonna do just a quick example. I'm gonna use one of my children as an example. So my daughter is only 2 years old. Everybody follow my screen?
Yes.
Yes, good, good. So let's say I want to save my daughter and make sure she has, when she's ready to go to college, she has enough money to use for her tuition. She can buy a car, or when she finishes college, she can even put a down payment on a home or start her own business. So for me, I'm going to say I'm going to save my daughter a $200 monthly. But does it mean you have to do that? You can absolutely save more. There's no limitation to how much you can save for your child. I'll take you to how your money grows, how your child money will grow over time, okay? So let's take a look here. So here is the age of the child. Here's the year they've been into the policy. So let's take a year, age 8, when the child is 18 years old, okay? That's the time when your child is going to school, but going to college. You have $46,996 available for you to use for your child tuition. If your child get a scholarship, leave the money in there. When your child graduate college at age 22, they have $68,000. Can you imagine what you can do as a 22-year-old with a $68,000? Like I say, buy your first home, start a business. So if a child 22 years old graduate with $68,000, do you think they're gonna go take any kind of job out there? No. They will know their worth. They already have money, enough money in a bank where they can easily start their own business. They're not gonna go take on a $30,000 job. You see? So you're already building your child confident. They have something to look up for. They don't have to take any job out there. Okay? So let's say your child leaves the money there until they're 32 years old and they decide to get married. Give them the gift of $156,000. What can they do with that? And that's tax-free money. And on top of that, because it's an index universal life, it comes with a death benefit. So while this child have this policy, if they'll get ill for any reason, they can access $918,000 in death benefit. God forbid if something happened, they pass away, the beneficiary can also take out can be left with $9,818. Okay, so let's say this child keep on contributing the $2,200. Now notice, It doesn't matter how old they get, the premiums remain the same. So that's why it's so crucial for children to get the policy while they're still young, because once you lock in the premium at a younger age, your premium never change, okay? You will see a person who's 42 still paying a premium of a 2-year-old, but getting the same benefit. So let's say your child decide, I'm gonna leave this my IUL account. I will leave it there for my retirement. Okay, they keep on contributing. Let's look at retirement age, and this is what I meant when I talk about $1 million baby. So we know average retirement in America is 65 years old. I want everybody to see how much money is in that child's account. They have $1.5 million. So that's what we call $1 million baby. Start your child early. By the time they get to retirement age, they are millionaires. Okay? So let's say this person decide not to retire at 65. Maybe they want to retire maybe when they're 70. 72. At 72, you have $2.4 million in there. Now, imagine us as the parents starting with just your child, and your child pass on this generational wealth to his children, and it goes on and on just by starting with just me and you. And that's what the elite do. The elite, they start their children while they are young, and they keep passing on generational wealth. Because you're not gonna tell me a parent who have $2.4 million is not gonna afford to buy his grandchildren and his children a policy as well. That way, when they grow up, they're all set. Thank you, Michael.
Wow, that is actually amazing. Just to add on that, Seraphine, maybe if you go back on age 65 when someone retires, or even on at 72, if you can put your pointer there, because mine can't be able to go there. You can imagine, yeah, if we can you see my pointer? No, you can't. So I can't see yours. So if you can see the planned premium outlay at age 72, this client paid in only $153,997. But go on your right. You put in $153,997. You're taking out $2.4 million. That is a ripoff to me, if I may say. And sometimes you may say, if you can go up there on face amount and premium Seraphine, put your cursor out there.
Face amount and premium.
Yeah, up there. When you will look at $183.33, that is not the cost of insurance. That is not the cost of that $916,000 plus. That cost includes the first amount, which is the life insurance, and then they are saving for you. That cash accumulation, go back down on cash accumulation. If you want to see that, you do the maximum on your screen, Seraphine.
Oh, sorry.
Minimize your screen a little bit. Yeah. So the cost of insurance really is less than $183 because you're also saving money. So you kill so many birds with one stone. And remember, this child has those living benefits we're talking about. The living benefits, just in case the child gets sick, a critical, a terminal, a chronical, you access the 900,000 while that child is still living. We all live in this country like everywhere else. Even young children get sick, God forbid. It does happen. We see children with those terminal illnesses, the critical illnesses, and the parents really suffer with so much like bills from the hospitals. It doesn't matter whether you have health insurance. When you get hit with a critical illness or a terminal, those bills are going to be crazy because you don't even have time to go to work because you're taking care of your young one. So really, the cost of this $1 million baby, like Seraphine is saying, you cannot put a cost to it because you put in so little and you get so much. And that $183, you can't even feel it. You don't even understand that you put it in because it goes in over time. So that was beautiful, Serafina. Thank you so much for showing us that. For me, really, I love to see. I don't like just listening to things. I love to see examples, because someone might be like, hey, is it actually possible? As you take off that screen, I think someone was asking in the chat, I think it's Daisy. Daisy, if you're still there, she did ask, are these accounts open to all
I am.
Yes, yes, Daisy. I'll be happy to answer that for you. You did ask if those accounts, maybe an IUL is open to all visas. Yes, it is. Actually, for the IUL, for the index account, as long as you're in the country legally, you have a work permit, you don't even have to have green card or citizenship. As long as you're allowed to work in the United States, you can get an IUL for yourself, for your child, for anybody in your family.
All right.
All right, that was beautiful, Serafina. Thank you so much for taking us through that. That was amazing. I think I learned a lot as well. So,
Thank you.
yeah, so you can all hold on to your questions. We'll go to Mr. Kaizi, then we can start a Q&A at the end, so that those ones who are coming in may be late. If they missed the discussion, at least they can be able to listen to those questions and maybe catch something in the way. So next to one of the another question that we had on our schedule was the income protection and power of living benefits. This is something we always get from our communities, from our listeners. We speak of this as something that this is a new era thing that we have. For people who maybe ever had life insurances out there, the traditional life insurance ones, you just get something. When you die, your family gets. When you die, your children get. So, and you wonder, why did they call it life insurance? Because life insurance should be for the living, right? They gave it a name, life insurance, not death insurance. But you end up getting something that will only help your people when you're gone, but not anymore, because all the products we have, be whichever it is, term, whole life, index, they all come with living benefits. And that is why people really are interested to know, how do those work? How do those help me actually protect my income? Which was the next question we had for Mr. Roy. Someone asked it from the last presentation we did last week, which is why we don't like to do presentations just there. We answer questions from our audience. That is why we're here as professionals, to answer those questions that are lingering out there. We don't want to just come and put a presentation there as if we are teaching, kindergarteners. No, we want to learn together. We want to give you what you want to know. We want you to ask us questions that are really disturbing you. So we learn as a community. We learn as a people, so we can be able to find solutions for our questions. So the next question was, we have heard so much about the power of living benefits. So how can the living benefits actually protect one's income? How is that possible? How is the power of living benefits protecting people's income? Mr. Roy, you can take us through that journey. The mic is all yours, sir. Thank you.
Thank you so much, Ms. Immaculate. Well, living benefits. Many people may be wondering, what's living benefits? Living benefits is the insurance that covers you get to enjoy it while you're still living. And, until recently, it was like a big gimmick that life insurance has living benefits that somebody can actually enjoy, because the majority of people who do not know about living benefits, they associate life insurance with just death. That is when you collect on death. At this point in time, in America, there's approximately about 150 million policies. Of those 150 million policies, 149 million, you have to die in order to get money from it, which gives us a big opportunity as financial professionals we have a whole lot of people that we need to help to learn about living benefits. And pretty much to answer your question, with living benefits, every year, millions of Americans get diagnosed with a heart attack, stroke, cancer, and the average age of a critical illness is 43 years. Well, of the 70% who survive, more than half of those will be bankrupt. And why is that? The cost of insurance, cost of surviving cancer is, the treatment is $20,000 approximately every month. That's what it costs. So why is living benefits so important? It's, if you get sick, you can't go to work. And if you can't go to work, who will pay your bills? This is where the living benefits comes in. Living benefits has a the riders under the living benefits. They have the critical illness, chronic, and the terminal. So with of the three, the chronic and the terminal can be accelerated up until almost 100%, depending on the determination by the doctor as to the kind of illness that you have. And we have seen many illustrations of how some of these benefits have been used. We have people out there. Usually we hear, oh, somebody was able to get helped by a living benefit. A living benefit is part and parcel of the insurance. It can be under the term insurance. It can also be accessed in the IUL. Now, this is for people who know about, if we are talking about Freedom Equity Group, the policies therein do have those coverages. And as Ms. Seraphine was illustrating, the death benefit amount on those illustrations includes the living benefits that can be accelerated. They're accelerated in case of a determination of either the chronic, the critical, or the terminal. Critical illness covers heart attack, stroke, and all those. Terminal is where you're determined not to possibly live within 24 months. So this is an important day for us, because apart from knowing a little bit about the living benefit riders, medical expenses, mortgage payments, all these expenses that can be taken care of by having a living benefits in plan, and the insurance comes into play. It is one of the newer additions on our policies. That's why we see the huge number of policies that are out there without having the power of the living benefits. Gives us, as insurance professionals, the chance to go out and make a mark. Did I answer your question, Ms. Immaculate?
Yes, you did, sir.
Okay.
Thank you so much. But I do have a question in there. So maybe I can try to chime in on that one as well. Someone is asking only illness, meaning you can only access the money if you are ill, or for tuition and students. So I can try to actually answer that a little bit, Daisy. Living benefits, I think Mr. Roy is trying he's trying to look on the time. If we can go back a little bit up, there are 3 different kind of the living benefits. So the living benefits cover when it has like 3 parts. If you get sick along the way, you access what they call the living benefits. You access your money, you access your life insurance while you're living. They call those the living benefits. So when you die soon, you access what they call tax-free death benefits. So there are 3 types you covered. Usually they tell you how to protect your whole life. We're using one payment. How does that work? If you get sick today, you access the living benefits. If you die tomorrow, God forbid, your family will access tax-free death benefit. If you live a long life, you're going to actually have the retirement benefits. So like Serafina was saying earlier, if you have an account for your child when she's 2 or 3 or 4 or 5, 10, whatever it is, and they never took out the money, they have those cash accumulation. So the cash accumulation can be taken out. You can take that cash accumulation out and you use it for college. You can use it to buy your home. You can pay off your home. You can put kids to school and keep putting kids to school. So those riders really, so the living benefits, they are there for you for the rest of your life. Today you get sick, you access the living benefits. You die tomorrow, you access the death benefit. You live a long life. You're not going to be older and begging because you have the retirement savings that was saved for you under the cash accumulation part. So I don't know if I answered your question, Daisy. That is not just for being sick. No, it covers you for the rest of your life, today, tomorrow, and the future. Thank you so much, Daisy. I think that was the only question I saw there for that one.
Just like you were saying, for everything we have show of proof of the power of what we illustrate. About a year ago, today I met a young lady at Ugandan convention, Miss Sarah. She's on the Zoom with us. She is one of us, and she has a testimonial about the living benefits. Could I ask to get her on at this time, or will it be after the questions? It may be better so that questions come after.
Yeah, please bring her on. Thank you.
Miss Sarah, the floor is yours.
Thank you, Miss Immaculate and Roy. Can you see my screen?
Mr. Roy will have to stop sharing first. Mr. Roy, stop sharing, please. Thank you.
Okay.
Tell me if you can see my screen.
Yes, please.
Mine is off, and I think we see your career path.
Yes.
Okay.
Yeah.
All right. Thank you so much for giving me this opportunity. My name is Sarah Mwanga. I've lived in the US for over 30 years, and I have a master's degree in accounting. I'm currently a financial director and a financial advisor, obviously. Before I got into this financial arena, I was looking for the American dream. I worked in El Salvador, Nigeria, Ghana, Sudan, and finally came back to the US in 2022. Obviously, for me to get into the financial arena, I was looking for a place to invest, and it made sense. A friend of mine called Patricia Geiger, she's from Zambia. She went after me for 4 months. I really gave her time, you know. I've realized that some people take longer to get convinced, and I think I was one of those people. She just was after me, and obviously that was for good reasons. I bought a policy of $400,000 at that time, which is July of last year. And as you can see at the bottom, critical and chronic illness, I get 90% of those benefits if I fall sick. So why I'm motivated to do this? I'm married with two of my cute children over there. It all made financial sense. Instead of investing in real estate in Africa that is unstable, there's risk and loss. So Patricia asked me a question. How many days forward could you survive if you stop living? No one had ever asked me that question. And at my age, 50, it made a lot of sense. I was like, oh, Lord Jesus, now you really have cornered me. You know, once you get sick, all those accounts in red, they all run out of money. The only two things that don't run out of money are annuities and life insurance. So I was convinced. I said, okay, let me see what this is. And as soon as she gave me an illustration, I signed up. So I'm going to skip this because you've already talked about it. But just wanted to tell you on February 27, 2024, I was diagnosed with stage 3 pancreatic cancer. So what was the first thing that came to me? Death. You know, I'm still young, very vibrant with my career. I work out. I think I'm a very good person, but I was scared of death. I panicked. I said, I have 2 children in college. God, what am I going to do? Each time I went to see the oncologist, I was just crying. So he said, stop coming here alone. So I started taking my sisters and my husband just to give me, you know, to soothe me. So I'm currently undergoing chemotherapy. I've been going under chemotherapy since March 6th of this year. And I just want to tell you that the chemo is reacting well. I started with cancer cells of 335. As of yesterday, when they measured me, I was 32. So that's a good thing. But lessons learned. Can this happen to you? Obviously, it can happen to anyone, you know. Look at me on the right-hand side. I was in Charlotte in December of last year. I had gone to dance for the Hornets. If you know that basketball team in Charlotte, they gave us space to dance, the Zumba class to dance. So when is a good time for you to protect yourself? Yesterday might be too late. If I had not protected myself in June of last year, today would have been late. Your spouse, today might be too late. So despite the stressful situation, something good came out of something bad. So regarding the living benefits, now I qualify for 90% payout of the 400K. Remember, that's 360,000. How this is going to work, they've asked me since March to fill in a lot of paperwork. And once that paperwork is done, they send it to all your doctors that you've seen. So since I've lived here for 30 years, you can imagine how many doctors that I've seen. And that takes time. So that started in March, we're in June. And as of June, all the paperwork has been done. Now, the $360,000 is not given to you all at once. So if your doctor says she will be out of work for a year, so that's 360 divided by 3. Okay, so this is something I'm learning. If my doctor had said she will not be well for the next 3 years, I would have gotten that 360 over 3 years. But as of now, I think my check is going to be a third of the 360, which is still a lot of money. I intend to use that to pay off my mortgage because so far my insurance is covering my cancer and chemo. Each chemo session, I do 2 chemo sessions a month. Each chemo session is $15,000 or $16,000, depending on how much chemo I get. Okay? So what were some of the signs that I had before I got diagnosed? I had lower back pain for a long time, but I thought, okay, I'm going to live with this for the rest of my life. But it just got worse and worse, and I just couldn't sleep at nights. So for anyone who has any kind of something of that nature, please check it out, or especially if you're insured. I'm glad that I got insured before this diagnosis. So do not procrastinate. Tomorrow could be too late for you if you're not protected. Okay? For those who are on this call and are not protected or are not insured, please reach out to the person who invited you so that you can get insured. Remember now, the fact that I have cancer, no insurance company can insure me, you know, because those are illnesses they're scared of. I have to be free of cancer for the next 3 years for me to even get a policy, because I'm thinking of getting a policy of $1 million. With this happening, I learned a lesson. And each time I give a presentation to family and friends, I move people because now I'm living the real life of why we're selling this insurance. So I'm educating families and friends through my company that I created, but I have peace of mind. And the most important thing, I'm creating generational wealth and financial education, especially among the diaspora. I've educated my kids about this. Now they know the importance of investing in index accounts. I don't use a checking account anymore because it just makes sense to invest in my policy. I just put money in my policy. So other than doing this, because I've been helping so many families, I started this business in January, but as you can see in February, I slowed down because of the diagnosis. But in March, I gave a moving presentation online, just like I'm doing now, and I made $10,000. So I'm still working. This is part-time. June hasn't been updated, but in just a few months, as you can see, I've made almost $20,000. So for those who are thinking of joining the business, it really feels good to have a second income. So that's all there is for my presentation. Over to you, Roy or Immaculate.
Okay, maybe I'll just chime in before I hand it over to Immaculate. Having met Sarah, she was in the process of, yes, she had just gotten her policy, but she was thinking of getting the licensing, the insurance license. I urged her that this is an opportunity that is a lifetime opportunity, and I'm glad she took it on. At that time, we had some negotiations of bringing her over to our team, but then she disappeared. I called her from October. She disappeared up until sometime in December. She's like, well, reality kicked in and I have been fighting cancer. So this is a good testimony here. She's been fighting it. We continue to pray for you, Miss Sarah, along this journey. And I think that was powerful and very moving. Despite being on different teams and all, we are glad of you being able to educate the people and also to keep the fight on. Thank you so much.
Thank you, Mr. Roy. Thank you so much, Sarah. That was so moving. Most of the time, we talk about the living benefits, and people don't put the real life to it for sure. It is so hard, so moving. Like when you hear one of your own, a sister, like us, you can all see she's young. Nobody could ever she could have never have known that she could get actually that. So when we talk to people, it is really, this is the reality. No, it's never inevitable. Nobody knows. The only time you know is that today I'm good. You don't even know what tomorrow brings to you. She said it beautifully that the best time to get insured is now. Because you may live today, next week you go to be checked, they tell you something is wrong. So people, it is a crusade actually on all of us to make sure that our families, ourselves, we are insured. Because you don't want to live a life now and then tomorrow you start suffering just because you never took an action. Life can change in an instant. You can never know when to change. So, Stella, we really praying for you, for your quick recovery. You are a strong woman, even coming here and giving us that moving testimony. There are so many people who are not even willing to do that. But that loving heart of you willing to share maybe can change someone's life as well. People who are still thinking that life insurance is expensive. There is nothing as expensive as a life. Life can never bought, but at least that living benefit money can help to elevate the other issues you have. You're going through medication, treatment, but at least your home is not going to be taken. Like you're saying that you're going to use some of the proceeds to pay off your home. That would have been an issue on your head, thinking that, oh, my home that I worked so hard for, it is going to be taken because I'm going through, treatment. So our listeners, we thank I can't even thank Selah for what she has done tonight. It feels so instant when it's someone else. We see people getting sick, but when it is your own, it hits home. We know God will protect you, Selah, and you feel better. You'll get through it, Selah. You look strong and very, you're a strong woman, and I know you'll beat that cancer in Jesus' name for sure. So yeah, this is what we talk about every single day. People think like people are trying to make money. No, we're not trying. Yes, we make money, but this is real. This is real. This can hit someone. Be young, be old. Please protect yourselves. Protect your families when it is still possible. There is what they call losing insurability in life insurance. You might be here today, you're healthy, you can get a life insurance tomorrow. Even leave alone even cancer, you get another critical or a chronical. You lose the insurability and you're no longer able to be insured. When today or yesterday or last year, it was possible. So the only time we have it now to take an action, really, to make a choice, to love ourselves, to put ourselves first. Because last time we had another session when we were actually talking about, you find all of us, we all have cars, we have homes, everything is insured. We don't even think about it. We don't even question it. Even the phones that we buy for ourselves, we insure them. But guess what? You tell someone to insure their families, they tell you it's expensive. Nothing is expensive as your life. Nothing is expensive as your family, for sure. Because all those belongings you got for yourselves, they all have spare parts. The car can be gone, you can acquire another one. Even home can go, you can acquire another one. But you have one life to live.